Good morning and welcome to Friday. Joe and Jason, Patriot Radio News Hour. Our toll-free number, 800-951-0592. The website at allamericangold.com. And it's Jobs Day today. And guess what? It doesn't matter. It's not important. This is a very rapidly developing story. The bank runs, we've been talking about Credit Suisse. The bank runs have come to roost here at home. Silicon Valley Bank, which was a I want to say it started Monday. It was like $285. This morning, it was down in the 30s. So from 285 to 30, the stock is halted. All of its employees were told to not come to work today. It appears they tried to have a capital raise. It failed. They essentially are insolvent, is what it really boils down to. And Janet Yellen has come out now, the Treasury, announcing that not only are they watching Silicon Valley Bank, Jason, it looks like there are several others. I don't want to create any rumors out there. Just looking at stock prices, it looks like First Republic is probably one of them, but it appears that this may be a situation where maybe similar to the savings and loans, these smaller regional type banks here, we got big problems because, as we know, we've talked about off-balance sheet stuff all the time. Most of the off-balance sheet stuff that these banks have, you're mostly talking about treasuries and mortgage-backed securities. These tend to be the biggest. There's credit card debt in there, student loan debt in, but they're much smaller pieces. Here's the problem: all of it is underwater because of interest rates. So when you talk about bonds, it's kind of a reverse correlation. As bond yields rise, that makes the bonds that you already own worth less. If you have to sell, if you can't hold them to maturity, you will lose money on the bonds. This is what's happened to Silicon Valley Bank. They lost $1.8 billion. As again, and of course, the regular person's the last to know. Major players, Jason, began pulling huge deposits out of this bank early in the week. And again, listen, the bank doesn't have money. We keep trying to tell that to people, right? They don't have your money sitting around for you to take at whatever you want. They can have, hey, we can handle the day-to-day stuff, but when all of a sudden big deposits start fleeing, they don't have the money. They were forced to sell these mortgage-backed securities, these treasuries, Jason, a loss totaling $1.8 billion, and it's now made the bank insolvent.
Right, Joe, and these treasuries that are getting harder to sell, right? I mean, if you got something, you're trying to shore up some things and try to make things work. I mean, if you have an asset that's not selling very well, that's not going to help either. But this is what happens when the money supply is shrinking. I mean, this is really the first time since we've been alive, Joe, that you actually see the money contracting. There's always been a growing of the money supply. So what you're seeing is the smaller players, they're going to be the ones, sitting out in the game of musical chairs. It happens every time. Every time these things happen, there's always somebody loses, right, Joe? And the bigger players absorb all of the activity, all the assets.
Yeah, the Treasury, Janet Yellen has met with the U.S. House Ways and Means Committee. Said the Treasury Department is monitoring, her exact words, a few banks amid what's going on with Silicon Valley Bank. Recent developments that concern a few banks that I'm monitoring very carefully. And when the banks experiences financial losses, it is and should be a matter of concern. And again, like I explained to you, when they have deposits being taken out that exceeds what they have, on hand, which isn't very much. It doesn't take a lot. One or two big customers pulling all of their money out is usually enough. Then what happens is they have to sell these off-balance sheet securities. And like I said, they're primarily treasuries and mortgage-backed securities. And unfortunately, because of the system that we're in, unlike the last financial crisis, remember, interest rates were zero at the last crisis. At least the treasuries you could sell and make some money on. Obviously, the mortgage-backed securities, that was dead in the water. But this time around, Jason, neither one of them is you're going to sell at a loss for everything you need to sell to make up for the deposits that you don't have.
Listen to the vagueness of her response there. We're looking at a few banks. There's only two things that you can get out of that, Joe. One, she knows it's 6 banks. We'll just say there's 6 banks, right? Or two, it's something that's happening and bubbling up, and she doesn't know how many banks, right? Few banks. She should know exactly what she's looking at, right? So she either doesn't know because it's a contagion, or she knows and doesn't want to say it's specifically the 6 banks that they're looking at, right? Or whatever number it is. It's pretty interesting when they come in vague like that, Joe.
Yeah, so this is going to be interesting. Right now, the stock is halted, as I said. They were unsuccessful in raising capital. Goldman Sachs tried to raise capital for them. That did not work. Right now, they're trying to find a buyer, right? This is shades of Bear Stearns, right? $2 a share. Patriot Radio News Hour. We'll be back. 800-951-0592. Joe and Jason, Patriot Radio News Hour. Yesterday, another big down day on Wall Street. Today, right now, the Dow is up 10. That will not last. I'm pretty confident in that. The S&P's down 11. The Nasdaq's down 52. Gold is up 30. Silver's up 50. Bond yields collapsing today. This is very significant. The biggest drop in bond yield since Lehman Brothers. This is companies. This is big institutions taking any remaining deposits that they can get their hands on and buying bonds right now. This is kind of like a little mini crisis. But this is why we tell you there's options here. Gold and silver is a great option. You don't have to worry about it. Our friends over at Y-Refi right now, think about it. They don't care about Silicon Valley Bank, right? They don't care about other banks and Janet Yellen and how many banks are in trouble. You got to have at least 50,000. That's the minimum. You can get up to 10.25%. 10.25%. And this is all in that defaulted student loan market, right? These people that have been written off as the scourge of the earth. Our friends over at Y-Refi find the ones that can actually, if you gave them a helping hand, can actually make their payments. The average person over at Y-Refi pays off. Think about this. Their loans were in default. They were done. They have it paid off in about 8.5 years. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or 888-YREFI24. And again, now the Dow's now down again. I expect another down day. Let me give you what I know. So there's some banks out there that are making headlines besides Silicon Valley Bank this morning. Regional and mid-sized banks pretty much down throughout the board. First Republic, who we've talked about, their shares down 20%. Pac West down 19%. Signature Bank down 13%. Other banks that are being mentioned, Schwab, all these companies turn themselves into banks. Schwab, Western Alliance, First Republic are also being mentioned. They're calling this a classic bank run. And when the bank run starts, you don't want to be the last guy there. Listen, this is why we've said it. We've said it forever. I wish it was different, but it isn't. Don't have excess money in your bank. I don't know how many more times we need to say it. It's not safe there. The reason why we have the biggest drop in bond yield since Lehman is all these big investors now, they're like, hey, you know what? I'm going to go buy treasuries instead of leaving my money in the bank. That's what they're doing. And again, that ties it. Obviously, they want it in the bank in case they want to write a check for something now with a trade. Maybe they're buying a 30-day. Maybe they're buying a 3-month. It's probably some short date treasury. But Jason, this just signifies, think about this. This was a $285 stock on Monday. Here we sit on Friday, and essentially, I don't know if they're going to find a buyer, but best case scenario, maybe they get $2 or $3. Worst case scenario, they're left with nothing. I don't know what's going to happen to these depositors either. Got to remember all these new rules, these bail-in rules. Here's the good thing. This bank isn't big enough where, remember, we talk about how much money the FDIC actually has. They only have about $130 billion. If it's just Silicon Valley Bank, they'll be able to pay that. So if you have less than 250,000, you'll probably be whole. Anybody with over 250, you're going to lose. The problem is, Jason, how many other banks now they're monitoring? They say a few banks. Let's hope. Listen, here's what we don't want, right? We don't want bank runs everywhere. That'll be horrible, right? Because they don't have the money to guarantee anything.
Yeah, you should definitely be worried because she should say, I'm looking at these two banks, because obviously these two banks are already being looked at by the news. She says a few banks. What does that mean, Joe?
A few means more than two, right? A few means more than one. We had Silvergate. We didn't really talk about them because they were the crypto bank. They went under. Was it either Monday or maybe it was Friday? They went under. Now we've got other banks now, and we'll continue to watch this. But here's the big problem: is as these off-balance sheet securities, as they call them, have to be liquidated to meet deposit demands. And so when I'm watching here, what I'm seeing here, like banks like First Republic or all the other ones that we've mentioned, is more than likely some major depositors that were leaving maybe millions of dollars in the bank because they're active, right? Tomorrow we may spend $10 million, right? That's just the nature of our business. It looks like a lot of these big depositors are going into the treasury market and saying, you know what, I'm just going to lock up here. And again, this is something, not only is it bad, obviously, on a bank run side, and let's hope it doesn't get bigger than this. That's the hope. But now all of a sudden, Jason, if a lot of these big players are doing that, this could definitely hurt the economy because that money's going to be locked up at least for a certain amount of time, right? Whether it's 30 days, 90 days, whatever treasury they decided to go into, we could see a lot of money come out of the economy in a very short period of time.
This stuff was happening last night, it sounds like. So I'm looking closer at it now. So they were talking about this stuff last night, like when the business day had ended.
Yeah, they had tried. So there was trouble here early in the week. I don't know who was first. But big depositors began pulling money out of Silicon Valley Bank Monday and Tuesday. By Wednesday, people knew there was a problem. They had actually got Goldman Sachs. They tried to raise money. They tried to do a stock offering very quickly. That failed yesterday. They weren't able to do it. And so then last night, everything was a buzz last night about we've got a problem here. This morning, things got worse. And now, of course, the stock is halted. The problem was their CEO was out there trying to tell everyone to be calm yesterday, knowing that the plan to sell stock wasn't going to work.
Yeah, I'm looking at what Wells Fargo, Jared Shaw. He was like what 1 o'clock yesterday, 2 o'clock yesterday. He's talking liquidity concerns. That's exactly what 2008 was. Liquidity froze, and that's what caused the old mess and then the whole bailout. So you got a big guy, from one of the big banks, Wells Fargo, yesterday at 2 o'clock, 1 o'clock, saying liquidity concerns. Liquidity concerns are putting pressure on banks right now. This was yesterday, right before the business day closed, Joe. So I'm surprised that anyone from the big banks are wanting to even speak out loud about this. And yeah, the Silicon Valley stuff was all happening yesterday around 4 or 5 o'clock. Everyone was reporting it. My TV was off, Joe, so I wasn't paying attention. But yeah, this is when they want to talk about it when it's happening at the end of the business day. Now here it is today. This could be a rocky weekend. Well, we'll have to see. Monday may be pretty shocking, possibly.
Here's what I think. This is what I think. Whatever mess they have, they're going to do something this weekend to try to stop it. At least that's what I would do, right? If I'm Janet Yellen right now, I am trying to stop this thing. They're going to have to try to survive today, obviously. Silicon Valley Bank, hopefully they can sell itself to somebody bigger. That way the FDIC doesn't have to, make depositors whole and spend a bunch of money here. If that doesn't happen, and again, I'm just looking at this, they took a $1.8 billion loss just to try to cover all those deposits. That's mind-blowing to me for a bank that's not that big to take that kind of a loss. It's one thing for us to say Credit Suisse lost $1.8 billion, right? I mean, they actually lost $7 billion, but who's counting? It's another thing to have this big of a loss. That to me says, man, there's got to be, there would probably have to be some kind of bribe to get a bank to absorb Silicon Valley Bank based on these losses, but we'll have to wait and see. But I guess my point being is, if there's going to be other banks, Janet Yellen needs to clean it up this weekend. They need to do what they need to do, because the last thing you want is for us to be back on the air on Monday and saying, oh, this bank and this bank and this bank are now in danger. They need to clean it up, and they need to do it quick.
Yeah, I think that's why Janet Yellen has been given that position of the Treasury, because the government always moves way slower than the Fed would like to move. So they're basically been marrying the Fed and the Treasury even more and more every coming year, Joe. They make it even a closer and closer relationship because they need to be able to move and act fast on these things. So probably why Janet Yellen ended up there, Joe, is because they need someone directly tied to the Fed to make this move fast. So we'll see what few banks she's working on, right?
Yeah, and I don't know that we'll know it. There's been talk about the Fed and the discount window. The problem there is, yes, banks could go there, but the Fed, let's just say that they were going to get, and let's just throw an arbitrary number out there. Whatever it was, whether it was treasuries or mortgage-backed securities, let's just say they're going to take a 5% loss. Okay. Hey, these securities are worth $1 billion. We had it marked at $1 billion. We're going to lose 5%. That's probably the market today. The Fed's discount window won't pay that. They'll pay something less than that. So they would have even more losses at the Fed window. So again, I don't know what type of facility, if there's going to be a new facility created here. But this just tells you this is allegedly good. We had jobs out there. We haven't even talked about jobs. 311,000 jobs. The unemployment rate, 3.6%. This is, good times. And we're talking about bank runs.
Yeah, I think with the bank problems, Joe, I think the Fed will definitely be doing a quarter point next week. That's what I say.
You know what? Hey, I didn't even think about that. That's probably true. I wonder if this is going to force, man, gosh, I didn't even think of that yet. This is a problem. This may force the Fed to end rate hikes with inflation still raging, there's no doubt about
They
it.
can't with the inflation. They can't.
The
They can't with the
higher the
inflation.
rates go, the more you're going to see
Yep.
this. I'm just
Yep.
telling you. The higher the rates go, the more you're going to see this. Do not have excess money in those bank accounts. Don't do it. There's no reason to do it. There's no reason. I get it. Oh, I feel safe. I love that my bank statement every month says I've got $200,000 in there. I know. I get it. It's not a good place to be right now. It really isn't. And again, I don't know. Is this going to spread? You know, obviously the big bank stocks, they're all taking it on the chin today, but they're probably going to be less affected by this. This is going to really be difficult for what I'll call the small to mid, you know, the regional type banks. It's going to be interesting. And here's the problem. Why did these big investors pull their money from Silicon Valley Bank? What did they know that we don't? I don't know. But they obviously saw something, right?
I think this might be why Powell was saying disinflation some time ago. I think he was trying to calm this down from happening first. That might be where disinflation came from, Joe, is this.
Right, maybe something we didn't even realize.